We have to be conscious that there are limitations on what we can get from this planet. And that's why the whole notion of a sustainable economy comes in, a sustainable real economy, meaning that we are not satisfied with what we can consume now, but also what we can consume in 10 years, in 50 years, in 100 years, and that still the Earth is in balance, can regenerate properly. That has to do with sustainability in an environmental sense, but also in a social sense. It's not acceptable at the end that there are very wealthy people living at some place in the Earth and very poor in other parts. That is an imbalance as well. That is the difference between the very rich and the very poor. And that should also change because it creates imbalances, tensions, and it's just not human. It's not human dignity there enough. And we have to live on one planet, and human dignity is part of that. Sustainable banking is focusing on servicing the real economy with the perspective of sustainability, meaning that human dignity is at its heart and that we overlook the short-termism, that we want to talk about long-term, resilient economic systems, what can be supported by the planet. Then we talk about sustainable banking. Not only the real economy as such is good enough, we have to bring it in a broader perspective, in time and with a global perspective. Banks actually do something with your money. They invest, they lend it to projects, to businesses. And in a way, they do that on behalf of you as a depositor. They don't do it because they just feel they have to. They do it on behalf of you. And they should really tell you that they do it on behalf of you. So you become co-responsible for what's happening. I would say sustainable banking is the dialogue between a depositor and the bank about what is the bank going to do with your money. It's also about the dialogue with the entrepreneur. What is the entrepreneur going to realize with the money borrowed from the bank? That sort of dialogues, and be very transparent about those dialogues, is the starting point of sustainable banking. And that is the first step. And then come the next step. The next step is to see how can we add quality to that dialogue, to that relation. Is it just about making profit? What is needed? No doubt. But it is also to create a new society, to create new relations between nature and people, between people among themselves, between a new idea people have. So I feel it's incredibly important that we start with transparency and then start a dialogue based on values about what does really bring your company into the future, and to the depositors, what sort of businesses, what sort of projects you want to support. That is what I believe is sustainable banking. I think growth is maybe not anymore the right expression. It's too linear. I think it's more and more how to create value. And I think there is a lot of growth today without any value. And there's a lot of value what is not expressed in growth. So what a bank should look at when, and Thomas Jorbeck was referring to that as well this morning, you include certain categories, like what does it do to the planet, what does it do to the people directly, not indirectly financial, but directly, and also how does it work financially, the triple bottom line as we call it. That is an important integrated part of our approach, and there is a better chance of creating value instead of just creating growth. So I do feel we can grow, but only if we create value. And it's important for our staff that they look at the value component first, and then if the result is growth, that's fine. It's the same with profit. We have started to see profit too much as a condition, as a sort of end result you have in your mind. And I think it's more something what comes out of a healthy process. And then it is a good check, but it's not the other way around. It's not profit at all cost. You want to do a valuable project, and profit shows you that it is a sensible thing to do in the end, but not to start with. What I mean by values is that there is a sort of physical part to it. It has to create something made or produced that serves the need of another person. Then it has real value. When a bakery produces bread, that bread has real value for other people. So that's sort of most simple and most basic sort of expression of a value. But I think there is also a level of values that has to do with how people relate to each other, how they can build initiatives together, how they can build a community together. That is another level of values that's as important as just the real physical values. And I think there is a third level that has to do what inspires us, what new ideas can arise, what is art, the cultural values. I think a modern society, a modern civilization should include all these three levels of values. Taking care of the earth in a proper way, making it possible for the earth to serve us, but not just explore it and exploit it, but really serving in a good sense and giving something back to the earth who cannot do it on his own anymore, helping it to survive and to live. The second level is more between people. How can we have a more just society? And the third thing, how do we can create new ideas, dynamism, really make things worse to live for. That is something more than just social. There also the art comes in. I feel those three levels of values are extremely important to realize. And that's, I think, what banking is about. We are on a very tough journey. That has to be clear. When Van City came in last year as a member, 1.5 years ago, and Tamara Froman, who's the CEO, she worked as a deputy minister in British Columbia, and she thought what we were doing was highly political. And she said, you realize if you become successful, you get a lot of resistance from all vested interests. So I'm very behind you, but realize you need a lot of courage and a lot of smart thinking to take up this political challenge. But I don't think we are afraid of that. As long as exactly what you say, we are very clear about what this common value base is. And we have to, at the one side, we have to sort of define that. On the other side, we have to make it inclusive again, so that not it's a typical European value base or a typical North American base or a typical Latin American. We want to do it in a way that it is a general human, global value where people can relate to. And I hope in the far future that it even comes to a moment, and this is dreaming, that regulators say banks who prove that they include these social and environmental elements in their risk assessments can do with a lower capital base than the other ones, because there is less risk. So not because we want to be treated to subsidized or supported, because there is simply less risk if you take that approach. That is not being achieved yet. We're all bankers in a way. When we save money, when we deposit money with a bank, that bank is using that money for certain investments. And by being more conscious about what your bank is doing with this money and maybe asking the bank the question, what are you doing with my money? You become also a conscious depositor. And in that sense, you become a conscious banker yourself. It's very important that we all become conscious bankers, knowing what is happening with money, so we make clear what is happening in that sphere, and that we not at the one hand purchase good products, but the other hand still deposit money for investments who are not so healthy. We have to make that connection, and that connection can only be made by the people themselves. That's where the real change can come from. That's what we call small is the new big. We're all just one person in a big, big global community. But if each person takes up that responsibility, they can really be the start of change. All those collective actions can really change society. And there is a huge power in combining these investment intentions of individual people. They can really ask their pension funds, their banks, many other funds to choose a different direction. And you will see in 10, 20 years we have a different economy because those investment funds, those banks, those pension funds feel supported by their people behind them and really will make that change.